Mark, welcome to the show today.
Thank you for having me. Looking forward to the conversation.
Hey, give us a little background on how you got started in finance and working with credit unions.
Sure. Back in my days out of college, I started working for a community bank. And what I quickly found out is I was the worst teller they had and lousy with the operations, but I was really good at sales and numbers and financials. So they said, "You seem like a lender to me." Started to cut my teeth in commercial lending and asset-based lending and real estate lending. And then I was working for where we consulted with banks all over the country on different commercial financing. Then after 9/11, virtually the company I was working for just about collapsed overnight. And I said, you know what? I'd really like community banking, community lending, and started to look around. And it was about that time there was this new thing that the law was passed where credit unions could start to do commercial lending. And at the time, the only thing that I knew about credit unions was that my father used to always say, "I love my credit union at the factory, and they're reliable to get loans." So I took a leap of faith and started up at a credit union 20 years ago when the industry was virtually at zero. And it's been a crazy ride ever since. And today, credit unions are the best unkept secret for accessing money for real estate investors.
Yeah, it's interesting that you say that. And we just very recently started working with credit unions, and it was like, wow, that's amazing. Like, it's been really, really cool. And so I think it is maybe one of the best kept secrets, maybe. But why should someone consider a credit union versus maybe a traditional loan broker?
Sure. I'm not immune to the fact that my money spends the same as every other money. My dollar is the same as every other dollar. And, if you think about it, nobody's out on the streets protesting against their local credit unions. They generally have a nice relationship with them and a favorable opinion. But I would bet 90% of the people don't really know what a credit union is underneath. And what a credit union is it's a not-for-profit financial cooperative. It doesn't have stockholders. It has a board that's elected by the membership, but the money and the whole function is really run for the membership, for the benefit of the local community and the members. We have tellers, we have drive-throughs, we have ATMs, and we have all of those other pieces. But it's really that philosophy. And I like to say, if I went to a bank, I'd probably get fired in the first week because I tend to be more relaxed and easygoing and conversational. Where I like to come up with a nice win-win solution. And that's really kind of that credit union philosophy of people helping people. 25 years ago, 30 years ago, every town had First National Bank of whatever town you were in with the big bank on the corner, and everybody knew their local banker. Well, unfortunately, those days are gone. And credit unions are really that replacement of today's community bank where you can access your lender, you can go in and have that conversation and access the decision makers.
Yeah, I actually love, Mark, that I've worked with credit unions before. And in fact, we have a really amazing credit union out of Alabama that we're working with right now. And I think it's something people don't think about or utilize enough. And maybe it's because they don't consider it as a way to get funding for their deals, or maybe they just don't know about it. I'm not really sure. Maybe sometimes you see with the credit unions out there that they don't have access, and this is the same with smaller banks as well. The technology maybe isn't up to speed at the same level like a Chase or a Bank of America or whatever. So people don't go down that path. But what you do is something really unique and specific that you actually help facilitate those credit unions to get them more up to speed. And so talk up to us a little bit about that.
Sure. Yeah, we're kind of unique in this industry in that I am the CEO of MBFS. And one way to think about us is that all years ago, all of these credit unions started to get into commercial lending, different real estate investment lending. Well, instead of every credit union going out there and hiring their own commercial lending, building their own, buying their own software system, having all of the credit analysts and back office, the credit union is a cooperative industry, but it's also a cooperative industry among themselves. So they form these companies throughout the United States. MBFS is owned by credit unions for credit unions and their members. And instead of, there's over 5,000 credit unions in America today. It could take a lot of time to hunt and peck through all of these different credit unions. Well, you can go to somebody like us and have access to over 75 different credit unions, and we'll help place you with the best credit unions and facilitate that loan. And I don't like, some people have said, oh, are you a broker? No, we're really that agent that acts on behalf of the credit union for their members and for the people. And also credit unions tend to be more regional in aspect. There are a few national credit unions, but that number you could probably count on two hands. So we help broker and bring deals together. We just had somebody who was in Pittsburgh and buying a $16 million property in Florida. Well, we work with credit unions in Pittsburgh and we work with credit unions in Florida, and we're able to bring everybody together and get the deal done in one seamless transaction because we have credit unions all throughout the country and can help them facilitate with each other. And most credit unions have that profile of what you would consider a small community bank. So maybe they don't have the financial resources to fund large-scale real estate investments, even though you may have that local account at your credit union and like the people. Well, we help participate and syndicate the deal together. So as far as you're concerned, you're getting your money from your local credit union and you can be happy with that deal.
So what are some of the differences of working with a credit union and maybe some pros and cons? In other words, how should an investor think about working with you guys, for example, versus more of a traditional lender?
Sure. I like to think of us as more of an artist than a box. If somebody just wants to take their deal and plug it in the box and out comes a rate, that's not us. We're more relationship based, where we want to get to know you. We want to get to know the project. We want to get to know the property. And also we want to know where you're heading to in your relationship so that we can help build a path to get there. So credit unions, we do some non-recourse lending for our bigger projects, but generally we're full recourse transactions. And we're going to ask the questions that are much more subjective in nature. Of tell me about what you're doing, tell me where you are. And we're not just simply a number crunching organization. Now, so if you're interested in plug it in and out, it's just a cold transaction to you. There's a lot of people in America that can do that. It's not us. One of the benefits is if you work with a federal credit union, by statute, actually, nothing you can do can charge a prepayment penalty. Now, rates today are going up, but rates were dropping. And really what we did is push the transactions and adjusted rates to keep the transactions, as opposed to saying, well, no, you're locked in. These rates just fell a couple percentage points, but too bad, so sad. So we tend to be very flexible in terms of our terms, but it's not that just we're not a widget counting product machine.
So give me an example of where you might maybe flexible in terms, because what I'm hearing is, my gosh, a lot of the stuff is is recourse, and we're like, man, we don't really like recourse. But then I'm gaining stuff. You mentioned, hey, there's no prepayment penalties. That's actually huge. That's a massive benefit because people want to refinance or sell, and now there's no prepayment penalty. So that's a huge advantage. And now you said we tend to be more relational, to understand how does that, and you have flexible terms. Give me some examples of how that might benefit the investor.
Sure. Generally, we're offering fixed rates between 5 and 10 years basis. We aren't restricted in terms of the amortization. So sometimes, an older property will do 20-year amortizations. A newer property will go up to 30-year amortizations. So we can be very flexible in terms of those terms that we offer and adjustable. We also tend to have a good room of negotiations. So we were willing to have that conversation to see was something that makes sense for you, rather than just here's our box, here's our product. Now, somebody like me, that actually we have a multitude of credit unions, so we can tend to move people around to get something that fits for you. But one of the keys in dealing with a credit union is, I always say it's important to know where your money is coming from with your lender. And when you look at a credit union balance sheet, they're lending you your money based off of their deposits. Whereas a bank is many times borrowing that money, or they have a fixed rate commitment that they're lending out to. And that's where you see inflexible terms. Credit unions as an industry generally have the lowest cost of capital of any option in the marketplace because of our balance sheet structure. So that's where you have more room to negotiate with a credit union because of the lowest cost of capital out of any lending option.
Yeah, so a lot of times the terms that we're seeing are actually very competitive. And so, for example, what kind of loans do you provide? Now, we talked about, of course, stabilized assets. Do you provide, loans for distressed assets? How does that work? Do you fund the construction, things of that nature? Like, what kind of loan products do you offer then?
Sure. I hate to say we do some of the same boring stuff that everybody else does. We do the apartment buildings, we do multifamily, we do office, we do medical, all the major big boxes. It's because we deal with a broad breadth of credit unions. There's usually somewhere that we can fit your mix. I'll give you my best example of, it was the middle of 2020, and we did a hotel in Alabama.
Yeesh. Nice.
Now, the good news, and Garrett can reiterate this because he's doing deals in Alabama, it was in Huntsville, Alabama, that was entirely open with a booming economy. I screamed bloody murder that we weren't going to do a hotel in the middle of 2020, but we did. And it's a great performing loan. I don't see credit unions getting involved so much in large scale ground up construction. A little bit, we've done some hotel constructions ground up, but not too much. Now, we do plenty of loans where people are buying an asset that has a lot of upside, and we did a property in Philadelphia that was an old hospital that was being renovated into retail and apartments. So we do have, we realize there's opportunities out there in the marketplace to buy cheap and build up. Now, in today's marketplace, it seems like there's not many of those opportunities to buy cheap as there used to be. But we are able to put together a competitive financing package.
Yeah, I think that and this is funny too, but I actually was able to get just because of the relationship and the kind of the mom and pop feel is I as a real estate investor, sometimes you have challenges with banks understanding on the residential side how your tax returns work, and can be a challenge because we have all this depreciation on our end, where I have a huge loss from all the bonus depreciation, everything else. And one of the few institutions that actually looked at what my financial situation was all the way around is a credit union, and to the point where they were comfortable giving residential loans or even car loans, stuff like that. And so that relationship side is really more impactful, more beneficial than I think most people understand until you actually get into it.
Yeah. Yeah, credit unions are really in this for the relationship to make your life successful, and so that you can grow your relationship as for a mortgage, for an auto loan. Now, what's crazy is over 125 million Americans belong to credit unions. So if you're a real estate investor, you probably already have that, but it's just not there. We really like and enjoy sitting down and taking a holistic view of your financial. Let's face it, the tax returns of most real estate investors are quite complex, quite convoluted. And if you just try to push them through a normal channel, even for some investment properties, it takes a lot of time to sit down and understand those tax returns in the financials. And we spend a lot of time really looking out on the projections, because heck, most of the time, we get a 2020 tax return today, and you might have half the properties on that sold. And you're buying a few other ones. Some of them are getting renovated and ramped up, and we're trying to put together all these pieces of what it looks like. And I can tell you, we have a whole team that does it. It's not me, because I don't think I could do it and spend that many times looking at all those tax returns and piecing them together. But it's a complex and convoluted process. We want to make decisions that are also good for you. Quite often, we get into financials of a property and say, are you aware of this? Do you realize this? Here's what we're seeing on the numbers. Because, let's face it, a bad deal is bad for you, but it's really bad for us. So we want to see you succeed. We want to see us succeed. And also, many times we get a loan package, and maybe we've seen this property before and have some little bit of inside baseball knowledge as to what's going on in the marketplace, that we could say, this one, here's what we're seeing that may not work. You're getting some financials, but the marketplace has changed. And, one of the big trends that we're seeing is that migration of people into different marketplaces, whether it's north-south from cities to small towns and suburbia. There's a real big shift in this marketplace, and people are moving, your deals are moving, and you got to be on top of what we're seeing in those spaces and in the different areas. Because, what was a good deal and a good buy a couple years ago, particularly in some of the major metro areas up north, it might not be a good deal today.
Yeah, it's so true. And I think right now, just thinking about how this can benefit anyone that's listening right now, is we're in a bit of a place where people aren't sure exactly what that product to maybe move forward with. It's like, do they sacrifice the variable rates and go into the fixed rate, but then they have to eat this huge yield maintenance penalty, or do they go in the other direction and do the variable rate and then put the interest rate cap and pay through the nose on that, and then just project out their interest rates rising to a certain level. And there's the benefit of going this direction on a deal that's of the right size is that you kind of cover both. So you're going to get the fixed rate and you're going to be put in a position where you don't have a prepayment penalty. And so it's not now for us operators that are larger operators may not make sense because we don't want to have too much recourse on our books because it actually can work against our net worth specifically. That said, it's a really, really useful tool, especially for people that are local. They're doing a lot of local business, and maybe they want to work a refi into their model. We're actually looking at just refinancing with the same credit union that we originated with. They're willing to do the cash out refi as well, and it's super easy. And they already know everything, and now it's just a seamless process. I don't have to worry about the prepayment penalty, and I don't have to worry about the interest rate. It's going to be fixed. So I wish I could take on way more recourse so that I could do these loans all day long because they're awesome.
Yeah.
But it's
we really go up to, and like most real estate investors, we work with people who are members of the credit union, or maybe you're starting out on those first couple deals. And last year we did up to a $38 million transaction. And if you look at that food chain of recourse versus non-recourse, it really just goes off of as you mature in your business, as you mature and stabilize in your financials on where you can be and the equity in your properties.
We talked about the loan package a little bit earlier. What is your advice to people to approach you about a loan, right? You kind of want to how should they approach you? What are you looking for where they're at least hitting the bullseye for getting the loan approved?
Sure. First of all, I always like to tell people if there's something bad or some hair that we have to work around, just let us know, because we're going to find it. We have people digging through the numbers. So just let us know, and we can be honest if it's something that we can work with first. And what people need to understand is that, first of all, we want to take a snapshot of who you are as a person. So we can take that personal financial statement and rent roll and your tax returns, and then combine it with your business and the financials and your rent rolls and where you're at in properties, and really understanding not where you are today, but is that indicative of the future? And organization is key. If we're asking for something, it's because we need it to make a good decision on your future. Don't give me a package that's 2/3 complete and not think we need it. We're really looking, and as Garrett just mentioned, that first dance with somebody is the hardest. That you're learning us, we're learning you. And the second one is much, much easier. So understand who people are. And the other piece that I would tell people as they're shopping, talk to your person to make sure that they're a fit for who you want to be and where you're going financially. There are people that don't lend to residential real estate investors. You could be a creditworthy person, they just don't do it. There are people that sometimes people look at their lenders like it's just a commodity, but they should really look at them more like a restaurant. You can go to any restaurant and eat food, but you can go to the local quick pick and get some cheap, fast, quick food that's not very good for you. You can go to the elites of the elite. You can go sort of middle of the road, but make sure before you start really spinning a lot of wheels with people, make sure culturally this lender is a fit for you. And just be organized, have a nice package of where, in general, everybody's going to kind of ask for those same things. We want to know about the project and how we're going to get paid back and what's going on in the future. If you're buying a distressed property, everybody's financials are rosy on what it's going to look like in 2 years. but let's, be realistic with it and just be honest and be candid and have a conversation. And if you don't have somebody who's going to have that conversation with you, just walk away. Because if it's not an easy application process, I can tell you the loan process isn't going to be very good either.
Mark, get out your crystal ball and look deep inside of it. Where do you see interest rates going, and what do you think the impact is going to be on the lending industry?
Sure. We are thinking that the interest rates will be it'll be upwards of 2.5% this year. Now, in my world, credit unions increase their cost of deposits much slower than they increase their rates. So we're able to lag that a little bit more and keep things a little flatter. Just because the prime rate goes up 50 basis points doesn't necessarily mean my rates go up 50 basis points overnight. But I always say, when it comes to the lending marketplace, you need jobs and people need employees. You need people and you need jobs. If you look in a lot of markets, I'm in Florida now, and you can't move without seeing construction and people with a lack of housing. So as long as people need that place to live, you're good. If you're in a marketplace where there's an outflow of people, they're moving from a northern state and there's some holes in it, you're going to have a little bit tougher time in the marketplace. Now, that also, I think, will level out over time, and there's some buying opportunities. But I think the fixed rate is always the best option for people, because generally that premium you're paying for the peace of mind and what your income is always the way to go. But if you have, I am very positive about the lending marketplace this year. Now, you can put aside the geopolitical items. You can put aside some of the inflations. In the multifamily and that real estate investment, people need a place to live. And a lot of times that's their first bill coming out the door. And you're looking at an employment rate that is sub-4. And even if there's some softening in the job market, there's still a massive gap where people need employees. So if you got population and you got people working, that market is going to stay pretty stable.
Yeah, exactly right. This has been really super interesting, and I think people watching, listening to should consider working with someone like yourself or credit unions. It's been very interesting for us, and we've started working with credit unions as well for that reason, being able to attract fixed debt without having to pay a lot of prepay. So it's super cool. Mark, how can people connect with you?
Sure. You can connect with me at markritter.com, markritter.com, and we'll connect with me on there, or go to mbfs.org. And if I don't have a credit union in your area that I'm directly working with, we'll match you up with somebody. We have plenty of friends throughout the country to get you moving in the process.
All right, guys, connect with Mark, find out more about credit unions. Thanks so much, Mark, for being on the show.
Thank you for having me.